In what can be described as a surprise to close watchers of the economy, the Central Bank of Nigeria's Monetary Policy Committee raised its main interest rate to 14% from 12%, while the cash reserve ratio kept at 22.5%, with Nigeria's liquidity ratio held at 30%. 5 out of 8 members voted for an increase, while 3 members voted to hold rates at 12%. The CBN governor, who announced the decision at the end of the meeting, explained that there was the need to favour price stability that will in the long run curtail inflation, thereby encouraging inflow of foreign exchange into the country.
The Nigerian economy is still saddled with effects of the shocks of the first quarter of 2016, which led to a contraction in output arising from energy shortages, high electricity tariff, price hikes, scarcity of foreign exchange, and depressed consumer demand, among others. Whereas the influence and persistence of some of the factors waned in the second quarter, it is unlikely that the economy rebounded strongly in the second quarter as setbacks in the energy sector continued, owing mainly to vandalism of oil installations.
Nigeria's naira has lost over 50% against the dollar since the last meeting, where flexibility of the monetary policy was recommended. The CBN says Nigeria's growth must be anchored on fiscal policy. He says as a regulatory body, monetary stability will continue to be its primary focus. He urged Nigerians to continue to encourage policymakers to stay the course.
The MPC voted 1. To increase MPR by 200 basis points from 12% to 14%. 2. Retain the CRR at 22.5%. 3. Retain liquidity ratio at 30%. And 4. Retain the asymmetric window at plus 200 basis points and minus 500 basis points around the MPR.
The MPR is the anchor rate at which the CBN, in performing its role, lends to deposit money banks to boost the level of liquidity. If the CBN intends to increase the level of liquidity, it reduces the MPR, but increases it when it intends to tighten money supply. Chiazalam Ekie, NTA News.